Welcome to the Capital Spreads Weekly Look Ahead. Today is Tuesday, the 11th of December 2012. And the markets have started relatively flat to positive. In fact, the FTSE is just having a go at that resistance area above and around 59.20. It's currently trading at 59.30, the Dow at 13,215. Eurodollar has recovered somewhat after some quite sharp falls. It's getting back towards the 1.3 area. It's at 129.90. Cable at 160.90. Gold at 17.12. And crude just having a little bit of a bounce as well after a sell-off. It's at 180 spot 10. So, as mentioned, quite a flat start yesterday, and that was on the back of decent Chinese data. So the market was sort of relatively well supported, and we're just seeing a bit of positivity today. The FTSE really trying to make some ground, and that is against the view of clients who really largely have been selling into this strength quite a bit and remain very short of the FTSE both yesterday and today. So what have we seen so far today? Well, we've seen some data from the UK on house prices. They have slowed, but interestingly, buyer inquiries have risen. So maybe the recent sort of downward move in house prices is just perhaps attracting some more buyers back into the market, but also there's probably an effect from the Funding for Lending scheme, the government-backed Funding for Lending scheme, which has just managed to produce some better sort of mortgage offers from some of those providers. So a bit of buyer interest on the back of weakness in house prices and the Funding for Lending scheme, but of course the house prices in London continue to sort of edge higher. We also had German ZEW economic sentiment, and that managed to achieve its first positive recording since May, and that was very much against expectations, and is quite encouraging for the market as well, and has been a main contributor to today's strength. Later on today we get the US trade balance. Then tomorrow we get unemployment figures from the UK. Now that will be interesting to see, because unemployment could edge higher after the temporary round of jobs that were employed for the Olympics. So we saw last month the first increase in claimant counts for quite some time, and we could see another increase in claimant counts tomorrow. So we'll see how the labour market is doing in the UK, which has been pretty resilient so far this year. And then later on, the FOMC. Now this will probably be the highlight of the week. The Operation Twist, of course, is due to end this year, so we expect the announcement of the purchase of new long-term treasuries by the Federal Reserve, and we also get more information from them as to their outlook for the labour market, so we will hopefully get a good idea of any new initiative in the new year as to just how that's going to deal with the labour market in the US. We'll also, of course, get Ben Bernanke's press conference after the decision, and there we will want to see his GDP growth prospects and his forecasts, and also, most importantly, the issue of the day, the US fiscal cliff. It will be very interesting to see exactly what he says regarding that. No doubt lots of pressure will be applied by him onto the politicians, who are still yet to agree on anything in terms of the US fiscal cliff. On Thursday, we get the commencement of the EU Council meeting. Now that's due to go into Friday as well, and this is quite an important meeting, of course. It's going to discuss any ideas as regards fiscal union for the European Union, and what sort of measures can be taken there for the sort of long-term prospects of the European Union. So that will be something to focus on. But what we also get from the US is retail sales, and they're expected to bounce from the Hurricane Sandy fall, so we'll have keep a close eye on those. And then we round off the week with PMI survey numbers from the EU and Germany, and then to finish off the week we get CPI and industrial productions from the US. So this year rapidly coming to an end, but plenty of things to look at this week. As ever, do give us feedback, media@capitalspreads.com.